The exact situation that caused the August 2024 freakout might be happening again right now. For the past 17 years, Japan has basically been the world's interest-free credit card. Big investors all around the world borrowed trillions of dollars of yen at near zero rates and piled that money into US tech stocks, crypto, and bonds. But now, Japan is hiking fast, and those yields hit their highest level since 2008. So that free credit card suddenly comes with a big bill. And that's why Bitcoin crashed $4,000 in 2 hours last night. That's why we saw a big domino effect sell-off across the board. And the scary part is, no one knows how big this really is. Estimates range from $1 to $2 trillion, all the way to $10 to $20 trillion when you include derivatives. So the question now is, how much unwinding is left, and what does it mean for stocks? Today, we're breaking it all down, plus what this could turn into.
Markets went crazy today as traders are trying to digest the Japanese carry trade. The world's largest margin call just started. Investors borrowed trillions of dollars at near zero rates and invested it in other assets like US tech stocks, crypto, and bonds. That's essentially what the definition of a carry trade is. Now, whenever we actually go and we look at Japanese yields, the music is stopping. Japanese bond yields went from negative 0.3% all the way up to 1%, which is the highest level since 2008. The free credit card is now charging interest, and it's getting more expensive every day. So now all the people who borrowed yen need to sell the assets that they bought so they can pay off their debt.
Oh yeah, and Tom, that's why Bitcoin got hit the hardest over the past 24 hours. We can see last night, this thing fell $4,000 in just 2 hours. It was pretty bad. It dipped below 85,000, and this led to a domino effect sell-off into basically everything else. Even if we look at the S&P 500 today, it had a pretty big gap down to start off. It dropped by 0.8%. It recovered decently throughout the day, but it definitely was a lot weaker and a lot more shaky than usual. And there was just a lot of selling across the board. And the problem is that this carry trade that we're talking about is massive. Now, it's so massive that no one actually knows how big it actually is. Basically, currency transactions are not centrally tracked, so the estimates of the size vary quite a bit, but we know there's at least $1 to $2 trillion in yen-funded trades based on BIS data, and broader estimates go far higher, up to $10 to $20 trillion when all yen-linked borrowing and derivatives are included globally. These are wide speculative estimates, but the main thing is that we are seeing a massive margin call unfolding right in front of our eyes. But Tom, as we remember, this is not the first warning sign we're seeing. As we all know, back on August 5th of 2024, there was something almost exactly like this, and the market freaked out quite a bit when this happened.
Yeah, we can see that the SPY essentially went from 555 all the way down to essentially 505 within that short period, but in July into early August there. That was definitely not a good thing to see for the overall stock market. Mike, like whenever we talk about this overall carry trade here, the S&P 500 right now is actually in a very critical spot, especially the SPY, of course. You know, the SPY had just came off one of the best Thanksgiving weeks in history. You know, we just had a massive uptrend. The SPY had been really actively pushing highs here in the shorter term, but now today, that was a big shift in sentiment and direction. Something that I did not like at all this morning with the SPY and with a lot of the price action is how it attempted to fill this gap and essentially rejected up around the gap fill zone. It got to around 683 at the high of the day where we started to reject. For tomorrow, I really want to see the SPY break 683 and even break Friday's high, closer to 684, before I get too bullish. That is going to be a very big zone to get past, considering all the downside action that we saw today. And something else that we also saw is that we actually fell below a key support level from Friday. Yes, where the SPY even is in after hours now, sitting right around 680, is a big zone of support. If we see it really fall under the 680 zone tomorrow, watch for it to possibly get towards 676 606 to 675. I could see this realistically coming into play tomorrow, given all the price action that we've seen lately. And again, the market just had that massive rip last week. Mike, we talked about a lot of data that suggested that the market could go down today. Now, of course, that didn't mean that we were calling a Japanese carry trade situation, but nonetheless, it ended up playing out quite well.
Exactly, and there's still actually a lot more data pointing to a little bit of weakness in the short term. Now, December is a very good month historically speaking, and we're going to talk about that, but we have to talk about the stats that matter the most right now. As we can see, we recently saw the S&P 500 put-to-call ratio fall below 0.45. Historically speaking, this is a pretty bad signal. We could see in a shorter term sense, whether you're looking 1 to 2 days later, or even in a more of a medium term sense, 1 to 2 weeks later, the market isn't green that often, and it actually pulls back by a decent amount.
Yeah, the average percent drop 1 week later is over 1%. 2 weeks later is right around that same number. But the percentage and just the times that the market goes green throughout this period is abysmal. With 1 week later, the market only going green 24% of the time. That is a pretty bad stat. So keep that in mind whenever you're looking at this data in the shorter term. And, just keep it in mind whenever you're analyzing the SPY chart right now, because it definitely shows that there could be some selling pressure. And at the same time, Mike, as we saw a lot of stocks popping up in the shorter term, the percentage of S&P 500 stocks that are now above their 10-day simple moving average is over 90%. That is a pretty crazy number, and we can see that in the shorter term over the past couple of years, whenever this has happened, this has actually coincided with the market starting to fall down a little bit in the shorter term. It doesn't mean that these pullbacks materialized into overall crashes or anything like that, but you can tell that it really does coincide with where we saw some slight pullbacks at least.
Yeah, and I think especially in the short term with all of this Japanese carry trade risk, take a close look at USD JPY. I know we're getting a little bit into Forex in this sense, but when you look at this ticker symbol, the more it falls, the more pressure that we are going to see put on the market with people get margin called, because the lower this goes, the more all of these investors who are over leveraged are going to be forced to unwind their positions. And like we talked about back in August of 2024, when there was that bigger freak out and we did see a fair amount of selling pressure come in, the yen strengthened quite a bit, which means this chart's falling. So just keep that in mind as well. But we don't want to be all doom and gloom. December historically is a really good month, one of the best months of the year. And we can see, historically speaking, going all the way back to 1950, most of the gains come in around the second half.
They definitely do. Santa definitely comes to town there, and the Santa rally starts to really pick things up around the end of the month. So keep that in mind. It's nice to see, though, that December since 1950 on average has risen 1.4%. That is a nice stat to see. Again, though, in the ultra short term, we have to be very careful. Every single year is different, and you have to look at stats in a different way. Something else that happened today, Mike, is that silver was actually surging. Yes, as we started to see a lot of traders freak out about the Japanese carry trade, we can see that silver continued its amazing run. Yes, even SLV broke above $53 today after recently breaking $50 on Friday. So what's going on here, Mike? What's going on with silver, and why are traders freaking out so much about, let's just say, metals in the short term whenever the carry trade is starting to really make things go up in the air a lot more?
Yeah, realistically, people see that there is risk out in the market right now, and investors are going to where their money is at least relatively safe. Deficit spending is only getting wider and wider, and the Fed is about to cut rates into 3% inflation. We have these risks with the Japanese yen carry trade, and valuations certainly aren't the cheapest either. So, it certainly makes a lot of sense to have at least some exposure to precious metals, and we're definitely seeing a big rotation into that as well. So much so that silver is actually up 96% on the year, and 17% in just 5 days, which is actually its 9th strongest 5-day surge since 2000. But historically, this does result in some selling pressure.
It does. We can see that 1 month later, 2 months later, even 3 months later, silver only goes green 44% of the time on the 1 month reading, 33% of the time on the 2-month, and only 44% on the 3-month. And, generally I would think the 3-month would be much higher than the 1-month, given how, things generally rise as we go forward. But that is a pretty bad statistic there. And even looking at other silver stats, silver's on track to post 8 consecutive monthly gains this month. If it does, it will tie the previous record from February of 1980. And we can see on this chart here, of course, this has only happened one other time in history, but when it happened, gosh, Mike, silver fell 64% 1 year later. 1 month later, it was down 62%. I'm not saying that that's going to happen this time, but we can see on the chart that silver has had some pretty big pullbacks before.
And it's exciting in a trading sense because, we have a lot of good fundamental reasons for precious metals to continue uptrending, but in a shorter term sense, there comes a point where the uptrend gets unsustainable. And what's super exciting is like we saw when gold actually pulled back, and I know silver slowed down too, back in the middle of October, we had that big pullback and there was a ton of money to be made trading that reversal. Gold isn't as kind of emotionally euphoric right now as silver. So I think silver is worth ultimately focusing on, but silver is in play right now. It's moving in a very asymmetric way. And I think there's going to be some great opportunities trading both directions on this ETF, not only over these next couple of days, but even over these next couple of months and certainly throughout the rest of 2025.
Yeah, and I know that there's a lot of big levels overhead. We talked yesterday about some of the more key psychological levels coming up with silver or just SLV. I am watching 55 being that whole dollar level up there. Keep in mind, it is an ETF, though, that will, at the end of the day, follow silver. I can't wait to see if silver gets above $60 an ounce, Mike. That would be pretty insane to say this week. And, if we continue on the path that we've been on, that could actually happen tomorrow if we get another day like we ended up posting here today. But, Mike, there's a lot going on in the short term. Number one, earnings are first and forefront for tomorrow for me, Mike. We have MRVL reporting in after hours with CrowdStrike and GitLab, even American Eagle, which has had that Sydney Sweeney hype this year. So be ready. We'll be seeing those stocks report tomorrow. I will say, though, as the week progresses, we're going to start seeing a lot more data start to release. On Wednesday, we'll get ISM Services PMI. On Thursday, initial jobless claims. And most importantly, on Friday, we will be seeing the core PCE price index, Michigan consumer sentiment, and personal income and personal spending data coming out at 10 a.m. Eastern. But one thing that is happening tonight that we need to keep on the radar is Jerome Powell is giving brief remarks and doing a panel discussion with Michael Boskin and Condoleezza Rice on George Shultz and his economy policy contributions. That's kind of a tongue twister there. Nonetheless, Powell will speak at 8 p.m. Eastern time tonight. Anytime he speaks, there could be something said. Just keep in mind, though, that I don't think that this event's going to be too crazy with the FOMC meeting coming up in just next week.
Yeah, it's so rare when you have Powell speaking at 8 p.m. at night. It's weird. It's certainly not like an FOMC interest rate decision, but either way, we'll see if any news comes out of it. And besides that, Tom, let's not waste any time and let's jump right into some setups and predictions. A stock that is definitely on my radar is AVGO, and it is to the downside. So this is in the chip space. It has been a very hot stock over the past couple of years. It has some heavy resistance overhead around this $400 level, and it's definitely on my bearish radar over these next couple of days. I think that the market is weakening right now, of course, and I think it's offering a good risk reward trading this stock lower. I really liked the price action that it had today. It sold off pretty hard right from open, but then it maintained and just continued pushing that selling pressure and actually broke its low of day shortly before it closed, which is nice. Also, the stock is just a little bit overextended in a broader sense, and we are just seeing some overall profit taking right now. Either way, AVGO is on my bearish radar for tomorrow and over these next couple of days. I would love to see this stock break below that 385 level for a breakdown.
Yeah, that would be a pretty awesome move here in the short term. That was a good level it bounced off of today. It pretty much double bottomed at that range. And if it does break down, I could see it continuing. Something that's actually really interesting with this overall setup here with AVGO, especially on the daily chart, is we can see that it's kind of in this stair step motion right now. And right now it's like on the very first candle on a possible pullback. So I like it quite a bit, Mike. I will be watching it like a hawk. With my first setup for tomorrow, this is going to be a very risky play. But Beyond Meat is back in play today. Yes, it is popping off. It broke above $1 per share, and we can see it's actually up 36% at close at least. It got close to $1.50 though. So that's going to be a big resistance that I watch for. If we're able to break above that resistance at $1.50, then go ahead and watch it for a continuation up. Again, this is a very risky trade. I do believe that this stock is going to be coming up off of its recent dip. It had been talked about a lot and even started to go through like Wall Street bets and have a lot of hype the last time it started to move. Today, we did see volume uptick compared to the previous green candles on the small pullback. So I will be watching for some possible short squeeze potential here.
Sounds good. Yeah, Beyond has been pretty crazy this year, and whenever it has an increase in momentum like this, it's definitely worth keeping on the radar. Another stock that is close on watch is Alibaba, ticker symbol BABA. It had a pretty good day today as it popped up by around 4.5%, and this was like one of the stocks in the market that actually showed some good strength today, plus Beyond, of course. But either way, it's on my bullish radar for a potential continuation. Chinese stocks move independently compared to U.S. stocks, and I don't think that's a bad thing, especially in a market that we're in right now. So for that reason, Alibaba's on my bullish radar for like these next couple of trading days. I would love to see this stock continue to put pressure on its recent highs, and it would be great to see a breakout past 165.
Yeah, as we zoom in a little bit closer, 165 is a pretty solid zone of resistance in the short term, so I will be watching for a potential breakout there. But with my next play, I'm looking at Robinhood for a possible downside move. We can see that Robinhood actually fell down 4% today, and I thought the pullback off the 130 resistance was pretty significant, and it actually bounced close to another big support around 119 to 120 today. Now, something I'm really looking for tomorrow is for Robinhood to continue down. You know, Bitcoin did have that drop today. A lot of crypto stocks were down. Robinhood was even falling along with them. And as I look at Robinhood on the Bookmap, there is clear buyers around that 119 to 120 zone. You can see that that's right where the buyers were stacked up intraday today, especially at 120. And once we saw that real bounce and rebreak of 120 happen back to the upside, Robinhood had a great recovery. So what I'm really watching for tomorrow, if you want to do more of a quicker scalp play, you can try to trade the $2 move from 122 down to 120. Just be careful though, there is that buy wall there. I do think though that going into tomorrow and the next few days, ultimately breaking 120 and getting that bigger continuation is where the real gains will be had.
Sounds good. Let's keep it close on watch. Robinhood is definitely a stock that moves in a pretty momentum-driven, asymmetric way. But besides that, Tom, let's jump right into the momentum plays. And with the first one, we have Barrick Gold, ticker symbol B, to the upside.
Yeah, if Barrick Gold can break its intraday high around 42.50, watch it up. This one can move quite a bit.
With the next one, we have ExxonMobil, ticker symbol XOM, also to the upside.
Yeah, ZOM, a bit of a slower mover, but the options can do great. If it breaks 117.40, watch it to the upside.
And then with the last one, we have Coinbase, ticker symbol COIN, to the downside.
Yeah, a lot of crypto stocks were down today. If coin breaks under 258, just under that 260 support, then watch it to the downside.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through at the levels listed. As always, how you trade is much more important than what you trade. Have stop losses for every trade you enter. Know where you're going to get out and never risk more than what you're comfortable losing. You can learn all about smart, long-term trading decision-making for free in the Key Lessons channel in the StockedUp Discord, so definitely check that out. But let's jump right into today's $8 million big money trade. Today's is pretty huge, and we are looking at ticker symbol URNM. Today, the trader here bought the 55 strike call options that expire on January 21st of 2028. They are risking $8 million to make $22 million. URNM is a uranium miners ETF. Uranium prices have just been crushing it over the past few years as the AI revolution significantly increased just worldwide energy needs, and nuclear energy specifically has been growing quite a bit as well. I would not be surprised at all to see this industry continue to grow. This is a very heavy trade. It has a good risk reward to it, but it has a lot of time to it. So only consider following this if you're happy to give it the amount of time that this trade needs.
Yeah, it's right around the money, sitting there at $55 per share. And with how much growth these stocks have had, you would think that the big money trader wouldn't want to miss out by shorting these and then, of course, missing out on some of that growth, especially if it's covered calls, right? But nonetheless, URNM, a lot of uranium stocks have been pulling back. And I know a lot of people have been looking for them to start to recover up off of this dip in a meaningful way. And URNM did test a pretty big zone of support, close to $48 to $50 recently, where it's started bouncing. I think that zone of support is going to be very important for this trade, and for a lot of traders, if that starts to give out, I think a lot of traders are going to start to get very worried about this. But remember that there's just so much time, and these stocks can be extremely volatile, where we could see some pretty big dips, but then again, ultimate recoveries. I know I said this yesterday, but it might not be too bad to go into some shares if you really wanted to minimize the volatility of call options. Nonetheless, though, I think it could end up being great, especially if you don't want that share exposure, but you still want to see that long-term benefit from these stocks moving. I like it quite a bit, Mike, and I love that $50 support in the short term.
Yeah, let's keep it close and watch. I would definitely say it's one of the bigger big money trades that we've seen in a while. But if you are new to the channel, welcome, and definitely consider obliterating that subscribe button. Every single day we cover multi-million-dollar big money trades, the most important news, information, upcoming events, earnings, SPY levels and analysis, historical stats, and everything you need to know about the market. It takes us a long time to make these videos, and we have a post for every single trading day. If you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. But we also have to give a giant shout out to today's member of the day, Harold, in the StockedUp Discord, who had some beautiful $4,000 in gains today. Actually, over that with some hood put options. So huge shout out to you, Harold. Keep up the great work going forward, and it is really awesome to see screenshots like this one. If you guys are into short-term trading, now is the time to strike. The biggest sale of the year, coupon code Black Friday, will get you into the StockedUp trading floor at the lowest price possible. Today we had some good action with the Surge Bot, with some MSTR put options that popped up by 101%, hood put options that popped up by 86%, Disney call options that popped up by 85%, Beyond call options that popped up by 82%. The list goes on, and of course there are a handful of duds sprinkled in there as well. You also get full access to the daily big money trades, weekly live events. You can chat with Tao and myself all day long and access more tools and resources than you could possibly ever need for trading. And we are also adding a ton of new software and tools in 2026 that are going to be pretty exciting. Once you sign up, you lock in your price for life. You'll never pay more, and we're constantly adding more to the program. We had some really good moves last week with the Surge Bot as well, with some AVGO call options that popped up by 319%. If you're into short-term trading, it's the place to be, and you can get in for the lowest price possible with coupon code Black Friday. So definitely check it out down below, but we're definitely set for a very exciting end to the year in the stock market. Volatility is heating up quite a bit, and it is a great time to be a trader. Thank you all so much for watching, and let's crush it in the market tomorrow.